Good morning, everybody, and welcome to the Public Accounts Committee on Thursday, the 11th of February 2016. We're here with our first witnesses today, talking about a recent tax settlement that Google UK and Google announced a few weeks ago. Mr. Britton, welcome back. Mr. Britton is President of Google Europe, Middle East and Africa. Promotion, Mr. Britton, since you appeared before us a couple of years ago, and Mr. Tom Hutchinson, the Vice President for Finance for Google Inc., which is the overarching Google corporation. Mr. Britton, I just thought it would be helpful at the beginning to ask a few questions just to set out some of the facts. Can you confirm that your revenues in the UK in the last 18 months were £1.18 billion?
That's correct.
Okay, and your profit in the UK in the same period was £106 million, is that right?
I think that's correct.
Okay. And I think I'm right in saying that 11% of your global profit is generated in the United Kingdom?
No, that's incorrect. That's sales to customers in the
Sales to customers, fine, okay. And globally, Alphabet, the parent company of Google Inc., is the biggest valued company in the world?
It depends on the share price on any given day of the week.
But it has been, that was certainly true in the last week or two, yeah?
At one point it was, correct.
Yeah. Well, with you and Apple, but up there vying for that. And can you confirm reports that your chief executive was paid £138 million last year?
I don't have the exact figure in front of me, but
$199 million.
Yeah, in the last few days, a new stock-based compensation was announced for our recently appointed chief executive. That is an amount which is based on stock. The value of the stock depends on the performance in the future, and it vests over multiple years. Well,
it's a lot of money.
That's true.
Yes. And your tax settlement that you announced a couple of weeks ago with HMRC, covering a 10-year period, was £130 million.
That's correct.
Okay, we'll get into what that involves maybe later. But Mr. Britton, I'm just here, we're here for taxpayers in Britain. Do you hear the anger and frustration out there that with those huge figures, you settled for a figure of £130 million?
Absolutely, and I welcome the chance to come and talk to you about this. Okay. I understand the anger, and indeed...
Do you really understand the anger, Mr. Britton? What do you get paid, Mr. Britton?
If that's relevant, I'll happily disclose that to the committee. What I understand is...
No, I'm asking you what you get paid.
I'll happily disclose that if that's a relevant matter for the committee in private.
I'm asking you, so it's a relevant matter. Could you tell me what you get paid, please, Mr. Britton?
I don't have the figure, but I'll happily provide it to the committee.
You don't know what you get paid, Mr.
Britton? Chair, let me...
I mean, perhaps you could give us a ballpark of what you get paid. Forget the share options then. What's your basic salary?
It's a salary. I don't have the figure, but I'll provide the figure privately. If it's relevant to the committee to understand my salary.
I'm sorry. Okay, you don't know what you get paid. Well, my point is, out there, taxpayers, our constituents, are very angry. They live in a different world, clearly, to the world that you live in, if you can't even tell us what you're actually paid. And I wonder if you've got tin ears, that you can't hear this. You went out there publicly to parade this tax deal, and you can't.
I'd love to mention what I was trying to say earlier, which is that I understand the anger, and I understand that people, when they see reported things like we're paying 3% tax, would be angry.
But Mr. Britton, you went out and you publicly went out with this tax deal. You announced it to the world, the 130 million, as a great deal.
No, can I be clear? We announced the settlement of a process that HMRC began 6 years ago, where they addressed many of the questions that the committee has raised with us previously about the substance of our operations and our tax affairs.
We're going to get into that. Sorry, but you chose, can I just be clear? We need questions and answers in this. You chose to publicly declare the outcome of the deal. Yes?
The outcome of the settlement of the process was going to be filed in our accounts and therefore was going to become public. And we alerted you, and we alerted the Treasury and the opposition that this was going to become public, given the intense interest there had been in multinational affairs and in our affairs as well. Yes,
but you went out and told people and told the media that this was going to be coming. You did before it was published information. You chose
at the time it was published because of the interest and the scrutiny that we've had.
I have to say, it seems a bit of a PR disaster, frankly, if you didn't have the nous to realise that this would, in the same week that taxpayers were filing their own tax returns and sweating over the little bit of bank interest, sweating about getting it in on time, and you announced this as a good deal. Why did you do it that way?
Chair, we announced it because the settlement was being published in our accounts. It was the conclusion of a 6-year rigorous independent tax audit in which we're paying tax at 20% like every other UK company. And the questions that you've asked us in the past about the substance of our activities were answered in detail by a fully transparent process which the HMRC conducted, and we were required to pay more tax as a result of that process in proportion the economic activity of Google in the UK. Those are the rules being applied to the facts as they find them.
So let me go back to the figures. On 1.16 billion of 1.16 billion, 1.18 billion of revenues and 106 million of profit. You paid 130 million over 10 years.
We're paying tax at 20% on the activities in the UK. Can I remind you, at the beginning of the 10-year period, which is 2005, Google had about 160 employees in the UK. We've invested heavily in recruiting.
We're going to go into your establishment in the UK in a moment. If you could answer the questions. Can I just then ask, of this 130 million pounds, how much is tax? How much was tax, and how much was interest on that tax?
Can I ask Tom's our global head of tax affairs?
Mr. Hutchinson, could you answer that question, please? Of that 130 million, how much was tax and how much was interest?
So 18 million of that was interest. The rest was tax.
Which is, great if most people would get a tough interest deal from HMRC. But let me just go back to your establishment in the UK. You have a big market in the UK,
yes.
Which you would.
As I said earlier, 10% of global sales come from sales to UK customers.
In the UK, 10%. Yeah. So, and how many staff are currently based here? Because lots of
we
figures
have
being bandied
over
around.
4,000 staff if you include directly employed and contractor staff working for our UK operation.
Okay,
now.
so over 4,000 staff, and you're building this new headquarters at King's Cross, which has had a bit of publicity. Can you tell us how much that's costing you?
When we announced it, I think the figure in total for acquisition of the site and the building is about £1 billion.
£1 billion, right. And how many staff will be based there?
I don't remember the full capacity, but we hope to continue to grow. Just to give you an indication, since we first appeared in front of the committee, we've hired about 1,000 more people in the UK. My hope is we'll continue to hire more people, and that will obviously generate more profits and taxes in the UK. Okay,
and yet you maintain that Ireland is where your European operation is based. And
that is true. In Ireland, we have well over 5,000 people working in Ireland. We have a data centre. We're building another data centre there as well, and people in Ireland serve not just customers and businesses in the UK, but across the Europe, Middle East and Africa. We have people speaking 40 languages there. Well, the HMRC visited Ireland and understood their activities.
Just to be clear, we have obviously gone through previous transcripts. Members of the committee who weren't on it before
so just making sure that you're clear. That we should be clear the way we operate is...
I know, Mr. Britton, I know the way you operate. Can I just ask some questions, and we're going to get into more details about that, please. Okay. So your UK operation is more than 10% of your 10% of your business.
10% of sales are to UK customers. That's correct.
And your UK profits generate yet a fraction of your overall tax bill.
Yeah. So it's important to understand that. And I think the committee raised this last time. You wrote a report after we appeared last time suggesting two things. One, we should look at our tax structures, which is what the HMRC has done. Yes. And secondly, we should pay tax proportionate to our UK sales. If those were the rules, that's what we would do. But those are not the rules. The rules are you should pay taxes on the profit, on the economic activity. This is at the heart of what HMRC looked at. And Tom can explain more. The application of the complex tax rules, which are 17,000 plus pages long in the UK, they spent 6 years understanding exactly what we do. You asked me when I appeared previously what people do in the UK, what people do in Ireland, and they interviewed our staff here, they interviewed our staff in Ireland, they looked at the systems and processes, they looked at all the legal contracts, and they applied
But Mr. Britton, you do remember, of course, that we called you back in 2013 because what you had told us in 2012 didn't chime with what you then learned about how deals were sealed. I don't want to revisit all that right this moment.
Can I just clarify, because you're making an important point there about our consistency.
I'll let you clarify that. We're generous on this one occasion, and I'm going to throw to Mr. Stuart Jackson.
Certainly. The details of how we operate I explained to the committee based on our current operations, and you asked us further questions based on how we were established in 2002 or 2003, which is before I started at Google, and so I was unaware. But I would say that all the questions you asked us and the evidence that was based on, I understand it, was passed to the HMRC, who considered it as part of their 6-year tax audit.
Well,
so all of those
we're going to be talking to
at.
HMRC shortly, but frankly, you are taxing already my patients and the patients of the hard-working taxpayer out there. But Mr. Jackson.
Mr. Britton, you were a very convincing witness in 2012, but let's remember that the National Audit Office have told us that they were not able to demonstrably prove that the evidence you gave in 2012 wasn't materially inaccurate. And I would draw your attention in particular to evidence that subsequently appeared after the 2012 hearing, which showed that UK staff carried out the substance of work leading to contracts with major UK clients, and that there was evidence around pay slips showing sales-related bonus payments. And that's something that you did not admit in the course of a very rigorous and robust questioning in 2012.
Well, I'm not sure what period you're
well,
referring
my
to.
point is, you'll forgive us if we're slightly less than convinced by your evidence.
So the HMRC, in their 6-year process, we provided full transparency so that they could see details of contracts, interview staff, interview customers, understand how our systems work, and address all those questions that you raised, including the payments of commission and what exactly staff were doing in all aspects of the process. Tom can explain more about how they looked at that detail, because it was extremely rigorous and we provided full transparency to them. I should have mentioned at this point, just in the interest of being fully transparent, the HMRC asked us for permission to divulge more information than they would normally in respect of the hearing later today, and we've given them that permission. That does give rise to 2 further amounts of tax that we have paid outside of the audit period, but I'd just like Tom to clarify that for you.
Well,
so
let me
you're
sit
aware
with
of that.
you, because I'm questioning you on this occasion.
Certainly.
I think your article in the Telegraph, which I've read, is slightly cheeky, to say the least. You sort of pose as an enlightened helper to the public debate, facilitating this debate as if you're some kind of disinterested observer, and that the wicked, awful tax system across the world has somehow just happened to Google, whereas actually you've made a choice to avoid tax, and you've set up structures specifically so to do. And I just think that there's an element here of we're doing the UK taxpayer a favour by paying tax. And that's what it feels like in your article in the Telegraph. I mean, for instance, in this one paragraph, some have suggested the settlement which concluded the audit was a sweetheart deal, a cut price tax rate. It was not. Google pays corporation tax on its UK profit at a standard rate, nearly 20%, etc. But the fact is, quite frankly, if I hadn't disclosed over the period of 2005 to 2015 all the circumstances of my income, I, as an individual, would be in a lot of trouble with HMRC.
Understand.
Why are you different?
Let me explain. At any one time, I understand that over 2/3 of the large companies in the UK are going under some kind of a review from the HMRC. So it's normal for large corporations to receive that kind of scrutiny. And that, for us, began a process that lasted 6 years of drilling into the detail of our operation. Part of that was to try to understand the nature of internet businesses, and many internet businesses have been scrutinised in terms of multinational taxes. Maybe ask Tom to explain a little bit more about the detail of your question there.
Well, no, let me come back to you.
Okay.
Why didn't you mention Bermuda in this article? I mean, that seems to be an integral part of your business model vis-à-vis your tax obligations.
But Bermuda has no impact on the tax that we pay in the UK. Having a tax expert here, it might be helpful to hear from him about that, because I know it sounds strange to UK ears, but it's actually a commonplace arrangement for
Bermuda,
American.
then?
It's a commonplace arrangement for American companies, and Tom can explain because he is our global head of tax.
Okay, well, before we get on to...
But if you'd like to hear the answer, he would be the person to answer it.
I'll decide who I ask questions. Thank
Sure,
you very
fine.
much for the guidance. Where is the value created in your business?
So that's at the heart of how corporation tax works, the question of where value is created. If you're a company in the UK selling cosmetics, you might go to an event that Google runs saying, here's how to use our services. You might speak to somebody in Dublin who can guide you in using our services. But the value for you is created when somebody in Japan searches on their phone for cosmetics and connects with you, and you sell cosmetics. So you think about that. Most of the value is created by the product search, which is developed and built in the US. Some of the value is created by the marketing person and the activity that has alerted you to this opportunity, some by the person in Dublin who guides you, but most of the value is created by the search. And that was something which was founded and created in the US, 20,000 engineers plus in the US, and 1,000 in the UK. I'd like that 1,000 to be bigger and bigger, and as that gets bigger, the proportion of our profits that we earn in the UK will become bigger. But the rules require you to pay your taxes based on the economic value creation. We paid 3.3 billion taxes last year, an average rate of around 20% over the last few years, the same as the rate of tax in the UK. So that's how the corporation tax system works, and we pay where the value is created.
I understand that. So a specific question going forward, because I'm not an unfair person, and I think from the press... Incidentally, I have to say, your press release was the dead cat strategy. You know, you knew that releasing that press release about 130 million would put the heat on the Treasury and the Chancellor and others, and take the heat off the substantive issue, which is your tax avoidance, I would say.
To be clear, I've appeared before this committee twice and been as thorough as we can do in answering your questions. We spent 6 years being transparent fully with the government's independent tax authority, asking detailed questions.
You've released so much, and why wouldn't you release more information about this tax arrangement so British taxpayers can see this?
We're here to answer all of your questions about the process, the questions,
can I
and the
specifically
issues.
come back to the diverted profits tax regime, which came in last year? Do you envisage, I was going on to say, in fairness, you have intimated in your press release that things have changed now, that you've accepted a more robust tax regime. Does that mean you're fully cognizant of the diverted tax regime and that you will be caught by that and therefore are willing to pay the proper amount in a timely way going forward?
Can I answer that question?
Mr. Hutchinson.
Thank you. So the diverted profit tax was a system that was set up to tax a separate tax system. Basically, if you're not paying the right amount of tax under the normal tax system, that's when it kicks in. Because of our settlement, as Matt described, the settlement with the HMRC, we're paying the right amount of taxes, so therefore we're not paying any additional taxes for
But
DPT.
it's for back taxes.
And it only applied for a very
forward.
small.
I'm talking about going forward, not back taxes.
No, I think that's
this is a deal you've made because for whatever reason, which we may get to the bottom of by the conclusion of this committee, you chose not to pay in the period between 2005 and 2015 the proper amount of tax to the Treasury. I'm talking about going forward. Are you going to be caught by the diverted tax regime going forward?
Again, let me just explain some of the details. We did pay, it was only for 1/4 of that settlement, so the very small part of that settlement where the DPT came into effect, and the conclusion was it did not apply to us. Going forward, if we're paying the right amount of tax according to the normal rules in the UK, then DPT would not apply again. The DPT is making sure you're paying the right amount of taxes based on the sort of the existing system.
But what's changed about your business model? What's changed since 2012? You're still using this model, this interaction between creation of value and a debate about creation of value between the UK, Ireland and Bermuda, which is a commonplace, as you say, amongst big companies. What has changed which will make you pay more tax effectively? And go to the heart of the chair's point, which is that there's a massive discrepancy between your sales and your profit that's declared and what you're actually paying in tax.
That's right. As Matt described, the way the tax system works, the corporate tax system, income tax system, is it taxes you based on the value of your activities. So a lot of the value that's attributable to the profits from UK customers is value created outside of the UK. It's relating to the technology that's been developed outside the UK. So you look at the value, the substance of the services provided in the UK, and you look at comparables. What would you pay a third party to provide those same services? And that's what we did. That's what we did in doing our tax returns. We were audited, as you know, by the HMRC. They came back and argued that it should be a higher amount, and that's the amount we ended up paying and settling for at the end of the day.
Okay, the Controller Order General will come in a minute, but can I ask a final question? It has been reported that you've had some pretty involved discussions with the tax regimes of Italy and France. Can you tell us a bit about that?
Yeah, we have as a large company, Google obviously is a very large company. Audits, tax audits are very commonplace. All large companies are going through audits. So I'm not going to comment on some of the press reports. So there's a lot of rumors out there in those articles, but we'll wait and see how those turn out. It's just hard to say.
Will you confirm that the sales and profits in those jurisdictions, France and Italy, are substantially lower than they are in the United Kingdom?
Again, I will say that we look at those activities just like we do, and we have to follow. Again, we have to follow.
Answer the question.
Yeah,
Are they smaller as a proportion of Google's worldwide income and sales and profits in France and Italy than they are in the United Kingdom?
Sales to customers in the UK are 10% of Google's sales, and that's the highest percentage of sales for any country outside the US. Obviously, taxes are paid on profits on economic activity and not in proportion to sales in each country, so that's a different matter because that's how corporation tax works.
That's right. It's based on
I understand that, but then...
Not the revenue.
But then why are you being asked to pay substantially more, hundreds of millions of euros or dollars?
Just like in the UK, there have been a whole range of statements that are based on what people and politicians and others might like to see large companies pay, but they're not related to a tax demand or an audit. They're just statements by politicians asking us to be paying more money. Politicians in many cases who, like the committee, would like to see a system where taxes are paid in proportionate to sales, and that's not the system that we have to deal with.
So are you, just for the benefit of the committee, are you specifically refuting the quoted figures that those tax jurisdictions say that they are going to ask you to pay? My final question is, what stage are you at in terms of your negotiation with the French and Italian tax authorities then?
What I'm saying is we're not confirming those rumors of what's happening. Those are articles that are not based on facts. But I can say, the information I can provide is we have never paid, as part of an audit outside the U.S., we have never paid an audit settlement larger than the one we just agreed to.
Very rude about politicians, though, if I may say. We're here, let me be really clear why we're here. We're here representing our constituents, taxpayers. Okay? You're a British citizen, you're a British taxpayer. Yeah. So don't you feel a bit embarrassed by this, the fact that you don't even know what you're paid? And you're living in a different planet to most of our constituents, frankly.
I'm proud to be British. I appear here because I believe in the process of democracy and the concerns of your constituents. As I said earlier, I understand why constituents are concerned when they see reports that we're paying 3% tax. It's just not true. We're paying 20% tax.
But the point is not so much the percentage, actually, is that 130 million, as one minister said, isn't an awful lot of money. But I'm going to ask
Chair, just to come on back on that, I think one of the key topics here in the past and today is, shouldn't we pay taxes proportionate to our sales in the UK? And I understand that.
But Mr. Britton,
but that's not the system as we find
Google Inc., Alphabet, you choose to set up your tax affairs in a particular way. You don't have to have. You came here the first time and said, "Well, I can have a tax haven in Bermuda, so we do." Yeah.
Can we address Bermuda?
Okay. Well, not. But my point is, you don't have to set up your tax affairs this way. You choose to do that. That is your choice, as well as what the law says. Mr. I'm going to bring in Sir Amos Morse, the Control and Auditor General, who's been waiting.
Okay. A point. Sorry. Just a factual point. Looking at your comparing your geographic accounts, admittedly between 2013 and your 18-month period of 2015. Your total charges applied against UK profits going into the group have gone from 642 million pounds to 1,178,000,000. That's your charges reducing your declared profit in the UK. Now, even when I adjust for the fact that that's an 18-month period, okay, even when I adjust downwards for that, which of course in fairness I must do, it's still an increase in rate of charge of about 50%. Now, I don't doubt that there are some business reasons that go behind that, otherwise you wouldn't have got it past HMRC. But nonetheless, effectively the money shot is how much you charge against your UK turnover, because that's the amount of money that's going off into your international group, right? So while we're having all this discussion, what's actually happening is the rate of offtake from UK declared tax is going up and up. Isn't that right?
Yeah, you mentioned a few.
Comment, yes.
Sorry, you mentioned a few figures there, and I'm not sure I followed them. So the figure that you mentioned, the 1.178 figure, that is the amount of revenue to our UK entities. So it's not a charge. It's the amount of revenue it's the commission that was paid from Google Ireland to Google UK for providing services. Okay, so that I just want to make that clarification. But again, so there aren't charges. Again, I'm not sure I understand your question exactly, but there are not charges that are being made from other companies into the UK. It's the other way around. It's revenue that's coming from Ireland to the UK. And that's because our sales to UK customers are being invoiced by our Irish entity. So I just wanted to clarify that, but I wasn't sure what your question was after I made that clarification.
Caroline.
I want to say very quickly, Mr. Britton, you've said 4 or 5 times in the last 20 minutes that we think you should be being taxed on sales. None of us, to my knowledge, believe you should be being taxed on sales. So in order to make progress in this hearing, I think it would be good if you didn't repeat it. Our concerns are, just to be absolutely clear, our concerns are not that you should be taxed on sales, just that you have come up with a number of contrived mechanisms, such as the double Irish, the Dutch sandwich, the use of Bermuda, which is not completely pervasive amongst US technology companies, just to tell the gentleman on your right about that. But just in terms of making progress, can we not keep repeating that we think you should be taxed on sales? We don't, and that is not the issue here.
So I do apologise. Can I answer that point, and then I won't mention it again? The reason I referred to that is after I appeared at the committee last time, the committee wrote a report with 2 key suggestions for Google. One, that we review our structures and tax affairs, and the HMRC was in the process of doing that and has concluded. And secondly, in your report you wrote, and I appreciate the committee was differently constituted, you wrote that we should be paying tax in proportion to our sales and where our customers are, and that's why I referred to that. So I accept the committee's composition has changed, but that is what the committee said last time we appeared, so that's why I referred to it.
But you haven't changed your composition of your tax?
Well, the HMRC did exactly what the committee suggested, and as you know, when we appeared before, but
just to be clear, Google has not changed its tax arrangement since then.
You recommended we looked at our structures in order to make them simpler and clearer, and that's what the HMRC did, and Tom can explain exactly how that process works.
But Mr. Hutchinson, just to be clear, before I ask Caroline Flint to come in, you have not changed your tax structures since you came before the committee in 2013.
So what I can say is we haven't. So the operations in the UK are substantially the same. We've made some changes too from a business perspective. But we haven't changed in a sense. I'm not sorry.
So I'm just be absolutely clear. You haven't.
I just want to make sure it's very clear that of course we make little changes here and there on things, but the overall substance of Google Ireland invoicing customers in the UK has not changed.
Just to be absolutely clear what Mr. Britton said. Right, Caroline Flint.
Good morning, Mr. Britton, Mr. Hutchinson. Very helpfully, you said that of the £130 million, 18 million represented interest. Could you tell me for the remaining 112 million, were there any penalty charges involved in that, any fines for that remaining amount?
No, so the 18 interest and the rest is taxes.
Okay, and you think that the 130 million is a fair settlement in terms of what you should be paying taxes for the period between 2005 and 2015?
I do. Again, it went through an extensive audit. The HMRC looked at all of our facts, talked to our customers, talked to our engineers, and they determined this is the amount to pay. And it was higher than we paid on returns, so it was we had to think about whether it was a fair amount, and we decided
Thank you, Ms. Hutchinson. I think you said you think it's yes would have sufficed for the answer there. So if it is a fair amount, why weren't you paying it, the proportion, in each of the tax years during that period?
Right. It's a good question. I mean, the tax rules are complicated, and there's not, oftentimes there are a range. So what I'd love to do is explain how transfer pricing works and what was done in the audit, just to give you some background.
Can I just stop you there?
Sure.
What have you discovered in the last 6 about how you pay tax in the UK that you didn't know before the 6-year investigation started?
It's a very common practice when you're getting audited by a tax authority, corporations, that they will take a different view on some of the complicated issues in terms of figuring out what are the right comparables, what are the right benchmarks to use, and determining what's the right amount of profit associated with the substance of what's being done in the UK. So there's usually, you look at comparable companies, and there's usually a range, of companies that make sense as far as the profit amount to show. So HMRC had a different view in that range, and it was within the same range.
So who's at fault here? Is it Google, Mr. Britton, or is it HMRC?
I think in this context, what HMRC was looking at was Google in the UK earning the right profit on the economic activities in the UK. And we had filed accounts that showed a level of profit that they believe was lower than it should be. Their process looks at, as the committee asked last time, looks at in detail the activities of our people and then looks at what are the right benchmarks to apply if we were to go outside Google and hire those services in. So somebody doing marketing.
Look, I understand all this, but you can understand
yeah, you're right. So
the public maybe tuning into this or maybe seeing it on the television later or reading it tomorrow's newspapers will be asking themselves, how could a massive company like Google, with all the expertise that it hires in the forms of Mr. Hutchinson's and many others, and how could HMRC, not in real time tackle the problems of how you should pay your tax? So let me ask you another question. Interesting, my colleague Mr. Mowat made the point that we're not saying on this committee that your tax should be based on your sales. But I've got a quote here from Google at the time in which you made the announcement of your payment of 130 million. And the quote goes like this: "We're paying 130 million in respect of previous years when the rules were to pay in respect of profits you make in a country. And then going forward, we'll also be paying in respect of sales to UK customers." How's that?
Yeah, so a headline I'll explain, and Tom can explain the application of the tax rules. The direction of travel, the OECD process and others are supportive of trying to simplify taxes and align more with some of the things that your constituents and others are concerned about with multinationals and tax, and we're supportive of that simplification process.
But this is, hang on, stop, Mr. Britton. This is a very bold statement that Google have made here. So presumably you've been looking, probably as part of this 6-year discussion you've had about what you should have paid in the past, and you're stating in this quote, "We'll also be paying in respect of sales to UK customers."
So
when's that going to start?
I'd like to address that. Well, actually, the
Will it start in the next financial tax year?
The settlement includes a proportion that is in respect of sales to UK customers. So every single year in the past is covering that as well.
So is it fair, therefore, arising out of that, that your reflection on the tax you should pay, and of course, that we've had, I think at previous committees, there's been discussion about the value of what you do. Your article this morning, which you talk about how much done in America in terms of R&D and everything else, helpfully leaving out Ireland and Bermuda in that discussion. Is it fair to say that you are now acknowledging in this quote, "We will also be paying in respect of sales to UK customers," that you haven't really estimated the profitability within that activity in the UK so far, and you have to get a better handle on that in the future?
So the settlement includes an element of the size of sales to UK customers in each of the 10 years between 2005 and 2015, and we will continue to pay on that basis now going forward. I'd like Tom to just be more transparent with you about a couple of amounts outside the audit period as well, so you can understand those too, because that's also something that we want to be transparent with you about.
Yes, so there's two other items that, two other payments that we made in connection with this, because we're talking about the amounts, we're focusing on the 130. There's actually two other amounts that were not directly related to the audit period. So there's one which relates to stock-based compensation issue. So you mentioned before about how HMRC took a very long time to get to this point to collect this money from us. With the stock-based compensation, we agreed that was an issue that was brought up as part of the audit. That was discussions that we were having with HMRC. So in 2012, we changed our approach for including stock-based compensation in that calculus of how do you determine your profits. So there's another amount that we paid in additional taxes that are relating to that stock-based compensation issue. I just wanted to mention it. We didn't include that in in our statement about the 130 million because it wasn't part of the settlement, but it was a change in our actions and our behavior in filing our tax returns. And then there's one other issue relating to 2004. So the audit period was 2005 to 2015 period, and we agreed, as you know, we agreed with the HMRC on what is the methodology for calculating the profits for the UK entity for each of those years. 2004 was not part of the audit, but some of the questions that they were asking about in these interviews that we talked about related to the 2004 period. And the 2004 is when we first set up this, our Irish structure where Ireland was invoicing into the UK. Before that, it was US. So there's additional amount we paid rather than open up an audit for that period. We decided, they came to us and said, here's the amount that you would pay under that same methodology, and we agreed to that amount as well. So that was an additional amount that went into this settlement.
Thank you, Mr. Hutchinson. But arriving at the £130 million settlement is an acknowledgement that you weren't paying your due tax during this period, and you have confirmed to us today that the 130 million doesn't include any fine by HMRC for non-payment of tax. So thank you for that.
If I could explain why that's the case.
Sorry?
I just want to explain why that's true. So when you're looking at penalties, you're looking at whether the taxpayer had a reasonable argument for the amount of profit they were showing. HMRC looks and says, are we just ignoring the rules, or did we interpret the rules in a reasonable way? And they determined we did, and that's why there was no penalty.
Well, maybe we'll have some questions for HMRC on that little letter. Could I just move on to another matter? Because the other thing I think you've confirmed as well, which is very helpful, is that there is something about sales in countries as well that you're going to be reflecting on in terms of how you pay your tax in the future in the UK. So I just want to move on to something else. The Minister, Mr Gawke, the Financial Secretary to the Treasury, told the House of Commons, I cannot talk about the Google case beyond information that is in the public domain. He didn't say, I am not privy to details of the Google case, or I have no knowledge of the Google case. Mr Britton, there's been something like 20-odd meetings that have taken place between Google and government ministers over the past 5 years. Was the Google tax case discussed in any of those meetings?
I want to be very clear with the committee. There's no involvement of politicians in the HMRC's process. It's an independent process, and we've not sought...
Yeah, I'm just asking you the question. Any of those 20-something meetings...
I'd happily answer. We've never sought or had a meeting about the tax audit with any government minister.
At any of those meetings, not seeking a meeting with a government minister to talk about tax, but at any of those meetings in which you've had with government ministers over this period of time, has the issue of your tax and what you should pay and the situation of your tax arrangements come up in those meetings?
First thing, why are we having meetings with ministers? Typically they're on issues of policy around the internet, child safety online, the application of copyright rules, how to stop child sexual abuse imagery online, dealing with counter-terrorism and security.
Anything about tax come up?
So just to be clear, that's the substance of most of the meetings that ministers request
fair
with
enough.
us.
And about tax?
I'm sure, given the scrutiny that we've had, tax will have come up from time to time as a question. The main thing we would be saying in any conversation about tax is that we would support a simplification. We want to be paying the right amount of tax.
That's really helpful, Mr Britton, because I presume any of the Google representatives were at a meeting where, in conversation over a cup of tea, if tax came up, there'd been a written note coming back into the company from your representatives at that meeting with a sort of readout from what was discussed at that meeting. No. Wouldn't it be the case?
No, because we have been through a 6-year audit by the government's appointed independent
I understand the
tax
6-year audit, Mr Britton.
And that's where the
You're just asking about a different thing, the audit, or she's asking about the informal conversations that may arise in these meetings about tax, not about the actual audit itself. It's pretty clear, but you can
I'm not trying to trap you here, Mr Britton, but you said in your own words, and we've got it on the record, that possibly in some of these meetings a question about tax may have come up.
I'd be surprised if it didn't, given the scrutiny.
Absolutely, I totally agree with you. And as a former minister and also in opposition as well, and when we meet with people, no doubt, the representatives of organisations then go back and do a readout to the company that they're representing of what happened at the meeting. Have you had any briefings from those meetings that you prepared to put in the public domain?
No, I don't think that. I have no briefings of any meetings around tax conversation with ministers.
No, about your meetings and what came up in those meetings with government ministers over the last 5 years.
The briefings I've had on any of those meetings typically are around the policy issues associated with the areas I've talked about.
You cannot today deny that maybe a conversation about tax may have come up in one of those meetings.
I'd be surprised if tax hadn't come up from time to time.
So let me move on to something else. When you publicly announced the settlement of 130 million, the Chancellor, I think, tweeted from Davos about how wonderful this was. He also said in a speech, I quote, "This is a major success of our tax policy. We've got Google to pay taxes, and I think it's a huge step forward and addresses that perfectly legitimate public anger that large corporations have not been paying tax. I think it's a really positive step. I hope to see more firms follow suit, and of course I've introduced a diverted profits tax which will require this going forward. So I think it's a big step forward and a victory for the government." Well, we've already heard in previous answers that the diverted profits tax probably is not going to apply to Google anyway. But could I just ask, what coordination was there between Google HMRC and staff working for the Chancellor in the press announcement that happened?
There was no coordination. We actually contacted the chair to alert her to the fact that this matter was going to become public when we filed our accounts, and we did the same, had a short meeting with the Treasury team and the Shadow Treasury team to alert them, as I say, given the scrutiny. As far as we were concerned, it was important to be clear that we were paying more tax following this audit, and at the end of the audit, we're paying the amount of tax the HMRC believes is the highest amount of tax. They can't settle unless we're paying the tax fully based on the facts. And we can't pay more than we're required to under the tax system because there isn't a legal mechanism to do that. So we're in the spotlight, and I understand why.
Yeah, but
we're paying the amount of tax we've been asked to pay by the government tax authority.
Really, the question was about any sort of coordination.
So the answer is we just alerted.
What was maybe I didn't hear correctly. So why was it that weekend that you decided to make the announcement with the Chancellor in Davos making a speech in which he could laud this tax settlement? Was there any? You're saying there was no coordination whatsoever about timing of the announcement?
The reason we talked about the settlement was because we were filing our UK accounts, and the settlement amount would become public, and therefore
what date were you
I don't have
filing?
exactly the dates, but it was around that time period.
We can certainly let you know exactly when you.
Yeah, it's a matter of public record because the accounts
fine.
were filed on that date.
I haven't got that information. You haven't got the information.
I don't have it with me,
so
but we'll
if you could
certainly
let us know.
Yeah.
But so you're saying there was nothing. Do you think it was unhelpful for the Chancellor to make that speech in such a way? Because it did sort of seem to indicate that, you know, given there it's meant to be separation between, you know, government ministers and HMRC, that he was maybe upping the ante on how much he, as a Chancellor, and other ministers may have played a role in this settlement.
Yeah, I mean, I think some of the characterisation in the time since has suggested some kind of a deal, and I want to be very clear. This is a result of the independent process, and it's the amount of tax we're required to pay. It's not a deal, and there's been no political involvement in the HMRC's process. That's the way it's designed to be, and that's one of the things which allows us to be completely transparent with the HMRC so they can reach the right amount of tax for us to pay.
My final question
that's my point.
My final question on this. Has at any time Google given permission to HMRC to brief ministers on the details of your tax returns?
No, the HMRC asked for permission to disclose more than they would normally do under taxpayer confidentiality for this committee. I think the session is immediately following us, and we gave them permission to disclose more about this so that they could answer your questions, and so that's all we've done in terms of...
So did that answer my question? Did you give permission at any time for them to brief ministers? That was my point, not this committee.
Think we gave any
to
permission.
Brief ministers on the details of the discussions,
I think I'm right in that we've only released permission for them. No, I think I'm right in saying that we've only agreed permission for them to give more details to you in the hearing subsequent to this, again with the aim of helping you understand their process, the questions they asked and the conclusions they reached.
Can I just be clear, picking up on what Ms Flint's been asking, that you say you've come to this arrangement, you announced it as you did, proactively, but this tells us that you weren't paying the right tax for that period of time. Now, Mr Hutchins, you talk about the reasonable, the HMRC has to be convinced that you've taken a reasonable interpretation of the rules. Aren't you embarrassed as a top tax professional that you got those wrong for 9 of the last 10 years?
Really, when you're doing tax audits, again, I talked about all large companies are going through tax audits, and we are throughout the world.
Yep.
It's very common to end up, after that audit, paying more taxes. These are interpretations of very complicated rules. So no, I'm not embarrassed by it. I'm not embarrassed by it.
So you would agree it's a matter of interpretation between you and the tax authorities?
Yeah, the tax rules are complicated. There's no doubt about that.
Okay, I'm going to hand to John Pugh, and then...
Okay, Mr. Britton, I think it's fair, possibly an understatement, to say that Google are a cutting-edge, innovative company, probably the most innovative in the world. Fair?
We try to innovate, we try to build products that work for everyone and help bring the internet.
And it's also entirely fair to say that you're absolutely brilliant, your product is absolutely brilliant at retrieving and displaying data and information.
We try to organise the world's information and make it accessible to everyone.
Okay, then following on from that, can I throw you a lifeline? Why don't you extricate yourself from this current and repeated embarrassment by voluntarily publishing your accounts on a country-by-country basis before the OECD or the EU make you do that? I mean, would you consider that?
We do publish our accounts in every country in which we operate, as we're required to do under law. I think you're referring, though, to the OECD's process of becoming more transparent about tax affairs, and Tom should comment because it's a matter of tax policy.
Well, do you personally welcome it?
I think that, as I think I agree with the whole of the committee, the tax rules being simpler and clearer and more transparent would be a big step forward, and I wrote about that today.
What I'm really suggesting is, why do you not get ahead of the game in an innovative way and, subscribe to the new framework before you're obliged to?
Yeah, I think that's one of the things we want to look at, and Tom can comment because it's his responsibility.
Well, you said in your own press release, you've admitted international tax laws should be rewritten. What did you have in mind then yourself?
Well, I think many of the questions the committee has asked on behalf of constituents who pay tax as income tax and pay tax as VAT would see that the tax affairs of companies that operate across more than one country are complicated, and I understand that, and that's why I understand when people are angry when they see headlines reporting single-digit tax rates when we pay 20%. So anything that makes the system simpler allows companies to get on with doing what they should be doing, which is hiring people and creating economic value, and that's what we want to do as well. So we want to pay the right amount and to be seen to pay the right amount.
So speaking from the corporate point of view, you actually welcome the EU OECD initiatives here, and Google themselves would not have a problem with the framework as developed so far?
We really support the process of trying to simplify the tax system. Tom's the person who would make the decisions on how we would apply that. So Tom.
Yeah, I'm happy to talk about it. So as I think you're referring to, the OECD came out with their BEPS process, base erosion profit shifting, the final reports in October of last year. A lot of what's in those reports are not final guidelines that all countries have agreed to. So it's very hard to say we agree with everything that's in those reports, but we definitely agree with, again, as Matt pointed out, the process of trying to get countries to all agree on the same rules and be consistent and be simple.
But you can see what the problem is, can't you? I mean, politicians are often accused of saying different things in different places. You're being accused of saying different things to different tax authorities to suit your purposes.
I wouldn't agree with that. I'm not sure why you're saying that. Why do you think that's true? I'm not sure I understand that comment.
Well, I mean, that is what the EU OECD process is designed to clear up, to make clear what tax is paid in what place, on what.
Right. As I pointed out before, our overall effective tax rate for Google as a whole across the world for the last 5 years is 19%. So I would say, since that's very close to the UK tax rate, we're paying the fair amount of tax worldwide. It's up to governments to decide where we should be paying that taxes. So I would love to see the system be more simple. So Matt won't have to be, won't have to come to hearings like this and explain it. But we need the governments to actually work together and develop an overall worldwide system to take that 19% and split it among the countries in a simple way.
Absolutely. Here's your choice to have an operation, part of your company based in Bermuda, a tax haven. That is a choice.
Yeah, as Matt mentioned, Bermuda has no impact at all on the amount of taxes we're paying in the UK. That's because of the US system.
You use the rules to good advantage.
Could we just deal with that question?
Can I just ask about, just going back to Mr. Pugh's point about country by country reporting? There are companies that do it better than you. You pride yourself on being a forward-thrusting company. Why don't you lead by example and do like Statoil or Barclays, a better fist of telling the taxpayers of the jurisdictions in which you work, what you actually, how you operate, what you earn, and what tax you pay? Why don't you voluntarily be more open?
Yeah, these rules, as was mentioned, these rules, the country-by-country reporting rules, they're coming into effect in 2016, this year. So those rules are already going to be out there, and we support those rules, and we'll provide that transparency according to those rules.
Yeah, you will be only when you have to by the rules. You didn't choose to do it before, as some companies do. That's my point.
I think we'd like to be recognised both for paying the right amount of tax where we operate, but also for us to be clearer on the value we create in each country we operate in. Obviously, part of the value is paying corporation taxes, and we pay the right amount exactly to the penny that the tax authority here has asked us to do. But we also create value through the use of products and services, through hiring people. We've hired 1,000 more people in the UK than after I appeared last time. So companies create value far in excess of the tax that they pay. We want to pay the right amount of tax, but we also want products and services that help hundreds of thousands of British companies grow, export and create jobs. And actually the UK is being successful at that, and we want to continue to invest here and do more of that.
I'm going to ask Richard Bacon to come. Sorry, David Mao at one point, and then
quite a play then, Mr. Britton, of your desire, which is laudable really, for a simpler tax system. And if only all these sort of politicians in all these different countries could get together and give you one, how much easier it would be. But it wasn't us that decided to ensure that all our sales were booked in Dublin. It wasn't us that decided that the way you were going to choose to operate was utilising a technique, as I said earlier, called the double Irish. That's nothing to do with your, if you like, apparently passionate requirement or desire for a more transparent system. Yet you tell us you want a transparent system, and yet with the system that's here, you use the double Irish, you use the Dutch sandwich, and you use Bermuda. And your argument so far, we'll come on to Bermuda, your argument so far that I've heard is everybody else does it, so we do. But anyway, it doesn't seem to stack up.
Can I deal with your operational question, then ask Tom to deal directly with Bermuda, because I think that's come up a number of times. Operationally, we set up in a way we think can best serve our customers and the markets. We set up our headquarters in Dublin. We have people speaking over 40 languages there, serving customers across the region. The reason we do that is we believe we can provide a better service by having expertise that's concentrated and shared. And many of our UK customers export to multiple markets, and having that resource that can speak multiple languages and help them reach those customers, we set up our operations for business reasons, not for tax reasons.
So just to be quite clear on that point, because it's an important one, evidence to the committee. The evidence you've given to us today is that you've set up in Dublin because of the ability to get lots of linguistic skills in Dublin, and it's nothing to do with the tax rates.
No, I said that...
That's what you just said.
No, I said that we set up our operations... To be clear, we set up our... we love being in London, and we've hired 1,000 more staff since I last appeared. We've got over 4,000 here. What I said was...
Sorry, can we let Mr. Britton answer?
Let's be fair. The two questions I want to come to, the operational question and then the use of Bermuda and other issues which you've raised a couple of times. We set up in Dublin to operate across the whole of the Europe, Middle East and Africa. We could have set up that operation in a range of different countries, and we chose to be in Dublin. And I mentioned to the committee before, a lower tax rate was one of the factors in operating there. So were lower property costs. So was the access to a high-speed internet connection across the Atlantic. There's a range of factors. Once you've got a scale operation across multiple countries, it's a benefit to customers in the UK to be able to access those skills and export, whether it's in Dublin or elsewhere. That's the operational reality. We set up our operations, and then in terms of the question you raised, I'd really like to address
Mr. Hutchinson, do you want to talk to us about why you have a setup in Bermuda? I think some of us know, but it would be good to have it on the record, and then I'm going to go to Deirdre Brock for a brief.
Sure, I've already made this comment, but I think it's very important to point out that the Bermuda structure does not impact the taxes we pay in the UK. The Bermuda structure is relating to the peculiar regime, the tax regime that we have in the US. It's a worldwide tax system. And under that tax system, it encourages companies like Google to keep their funds overseas. Once they bring that back, then they're taxed at the very high US rates. So that's sort of one piece of that pie, but I think the most important point is it does not affect the amount of taxes you pay in the UK. Sorry, if I could just finish, just one more point.
If I could just answer that, then that's what you've just said is right. Clearly, it doesn't affect your UK tax per se because you've already moved that through Ireland.
Yeah.
But I was just using it as an example in reply to Mr. Britton's point that all that Google want is a simpler tax regime so you can get on with building search engines and not have to worry about all this stuff.
Right, and I would agree with that.
All I'm saying is that your use of these structures, albeit it's not uncommon, isn't indicative of that desire.
Again, I understand that concern, but if you look at the fact that we were paying a 19% rate for the last 5 years, that is I would say, a very fair rate. It's the rate in the UK, so I have to assume that that's a fair rate to pay on your profits. The question is, where do we show? It's not that we're not paying enough taxes, it's which country do we pay those taxes in? And that's determined by governments.
I'm going to bring in Deirdre Brock.
Okay, just a couple of quick questions I'd like some clarity on, if I may, Mr. Britton or Mr. Hutchinson. One of the issues that you mentioned in your accounts that HMRC challenged Google on during the audit was about share-based compensation. I think you referenced it when Ms. Flint was speaking. Could you explain that to us, please, and how it benefits Google?
Sure, yeah. So there's share-based compensation. The issue is that obviously that's stock that's issued by Google Inc. and Alphabet, the parent company. It's it's part of the compensation package for employees all throughout the world. They're getting, as part of their compensation, for most employees, they're getting stock in Google Inc. or Alphabet now.
How does that benefit you tax-wise? So why was HMRC bringing that up as an issue?
It's not that it's a benefit. It's just that the issue that we were debating with the HMRC as part of this audit is whether that benefit that's accruing to employees in the UK, whether that should be included in the cost base of our UK entity. Even though it's not a true cost, there's not cash going out the door, and it's not stock in the UK entity, it's stock in the US entity.
And the final
question
outcome
is,
was?
Does that go into the base?
And the outcome was?
Sorry?
The outcome of those discussions?
And so the outcome, and this is why we paid more taxes, the outcome was that we would include it in the base for both prior years, which was part of the settlement, and from 2012 on, we included it in the tax returns as we originally filed.
Okay. With regard to its original use, could I ask what role your auditors, EY or Ernst & Young, as I think they were called before, play and advise on introducing that?
Sorry, I'm not sure I understand the question. So what
role
did they have in that process?
Sorry?
So what role did they have in that process? So the audit process or the
just in advising you to take that
that
option.
Yeah, I don't know that EY was involved in that process. So we would look at that issue internally. Oftentimes we'll use advisors if the issue is unclear. Again, as I mentioned, they're very complex. So we likely dealt with an outside advisor on that issue, but I can't say if that was EY or some other outside advisor.
Okay, could we get that?
If you can tell us if that's the case.
Sure, I can
that would be useful. Very helpful. Thank you.
Of course.
Richard Bacon.
Mr. Britton, I've just got a couple of questions. First of all, you said we paid tax at 20% on our activities in the UK. Can you say what the number is that's 100, of which 20% would be what you paid on your activities?
Just for the record. UK income for the last accounting period was £1.2 billion.
£1.2 billion.
For the last accounting period.
So that's the number on which you pay tax at 20%?
No, that's the revenue.
I'm asking you a question based on what you said.
Sorry, you asked me for the revenue figure.
If I go £1.2 billion multiplied by 20%, I get 240 million, which I quite like. But that's not what you paid.
No, but
you said, if I can just repeat it, we paid tax at 20% on our activities in the UK.
Profits on
I'm asking, on your profits.
Yes, I didn't want to mention sales.
Yes, I thought taxes were paid on profits as well. Could you then just tell me, what is the number upon which you paid tax at 20%?
I don't have a profit number in front of me, but if it was a profit, it would be...
I'm not looking for a would-be answer. You said we paid tax at 20% on our activities in the UK. Now, you're now correcting that to on our profits in the UK. Do you mean we paid tax at 20% on our profits on our activities in the UK?
Yes,
is that what you're trying
to say? That's how the system works.
Right, okay, so what's the number?
The number, 240 million, I get the exact number, but it must be that if that's the,
not necessarily.
headline revenue number.
Mr. Hutchinson, can you help us?
I don't have that number in front of me.
You don't know how much tax we pay in the UK?
No, we paid 46 million of tax.
No, how much?
The tax was 46.
I read 46 million somewhere as well.
Year, are you talking about, I'm not sure I understand what period you're asking for. If you could slow down a bit and just...
Well, I'm asking...
Over what period are you asking for?
I read the 46 million. I was just asking a question about something Mr. Britton said earlier. Presumably, if the number is 46, then 46.2 times 5, that's 231 million pounds. 231 million pounds is then your activities in the UK.
That's the profit on those activities.
That's the profit.
Yes.
Okay, good. I just want to get that on the record. Good. It took a bit longer than I hoped, but anyway. I've got one other question. Why did it take you 6 years, which is as long as the Second World War, to explain your activities adequately to HMRC?
Well, this is a process that HMRC drives and runs. And one of the things they did in that process was they did take an extended period of time to look at the nature of an internet business.
Yes.
So one of the things they did was slow down the process in order to ask us, other tax authorities, and look at the nature of an internet. So they went back and looked at the detail of how our products operate. But the timetable of the process is driven by HMRC according to their published and fairly detailed and rigorous standards. Tom's team was fully involved in answering all their questions throughout that period.
Yes. So it was basically, you're saying, HMRC's fault for being so slow.
Well, no, they run the process according to their to their published standards and the requirements the government puts on them as their independent tax experts.
Well, our committee's charged with looking at effectiveness and efficiency in the economy. And if it takes 6 years to investigate something, either you're very bad at explaining or they're very thick at understanding.
All I can say is we did provide them with an awful lot of information. They interviewed a lot of staff, including myself, people in Dublin from top to bottom of the organisation. They looked at our contracts, they looked at how our systems work. They sat alongside colleagues and listened to customers calling us so they could really understand the facts of our operation. And you can understand in some cases it might be faster. It's an operation they've seen many times before. They're looking at Google. We have a search engine. We have a whole range of things that are new, and they probably would have taken longer to do that. But I have to say we were really fully transparent with them.
I hope
any
so.
information they asked for.
After that number of days, it seems to me incredible that it takes 6 years to explain what the internet is to somebody and how it works. Well, I'll ask HMRC when they come on. Thank you.
Can I just ask on very quickly? was the substance, whether, as Mr. Bacon says, you were slow or they were thick, or a combination of both, but was the substance a dispute about specifically their understanding of transfer pricing? Was that at the heart of the dispute?
Yeah, the heart of the question they ask is, what's the right profit for Google's activities as the UK, which is what Mr. Bacon was getting to there as well. So the heart of the question is, what are the activities? And what's the right profit on those activities? And they apply a methodology to that.
The correct number or not? I was just trying to get what.
No, I appreciate that.
And do you think now they understand your business model?
I think they've got a very thorough understanding of what our people in the UK do and what our people in Dublin do, and what the products are and how the services operate. And Tom's team was at the heart of providing answers.
So can I ask? Did they ask you
basis.
questions about permanent establishment as part of that whole process?
Sure.
So they investigated.
Oh, did they ask?
London.
Sorry, I thought you were going to ask me a question.
So did they
yes,
investigate the London operation as a
that was a big part of their inquiry, was asking questions about whether the activities that were done in the UK, by our employees in the UK, whether that would rise to a level of a permanent establishment. But I think it's also important to point out that whether there was a permanent establishment or not, and there's been a lot of discussion, not as much today, but in prior hearings about that and what sales activities are happening in the UK versus Ireland. Whether there's a PE or not, that would not change. Like the statement I made about the Bermuda structure, that would not change the amount of taxes we would pay in the UK. Because what wasn't talked about last time is there's two steps in that process when you're dealing with PE. First, if you prove there is a PE, which again, the facts did not support that. But even if you did prove a PE, the next step in that process is what is the value of that PE? Which gets right back to the transfer pricing discussion, which is what is the value of the services provided in country. So it doesn't result in a change to the corporate income taxes you owe at the end of the day.
Well, we know that there's a lot of discussion, because we've obviously been doing quite a lot of preparation about this and on previous committees. So we know there is discussion, and that in the end, a deal has to be done between you on what that actually on that matter is. And
obviously, a lot of negotiation went on to arrive at the 130 million. Would you be prepared to share with the committee what was the top line figure at which negotiating, after discussion about what you should pay, negotiations started from? What was the figure for? Maybe was it 200 million, 300 million, and following negotiation to get down to 130 million?
Yeah, I think it's a great question. That's not how it worked in the process. They don't throw out a number. It's not a negotiation.
No,
they throw out a number. We throw out another number.
They may have looked at the rules and everything and come to a view about what the headline figure should be. Then you would come back and say, well, actually, tax inspector person, that actually we've got these other things that you need to take into account, and we invested here, so knock that off. So I'm just I understand. I'm not suggesting they just pluck a figure out of the air, but
great.
What was the top line figure that
again,
you worked down
no,
from?
Again, just to explain, there was no top line figure. That's not how the process works. The
but
process works.
The process is very,
if I could just describe how the process works, I think it might help in this discussion. The process is, they initially do a very long fact-finding process. They're talking, as Matt mentioned before, they're talking to our engineers, they're talking to our customers, they're talking to our employees. They went here and in Dublin to understand the substance of what's happening in our UK office. And then they do an analysis of the tax law and how that applies. And they look at transfer pricing rules require you to look at what would a third party get for those services. So they're looking at our comparables that we used in doing our tax return. They may be arguing about, well, is that the right comparable? Maybe they should have another comparable in that process. We're arguing about what is the right profit to show. We're not starting with, they never threw out an amount and said, here's what you owe us. And we said, no, we want to owe something smaller than that. That's not how the process works.
But you're saying that the process was opaque and confusing through those 6 years. And yet at the end,
I didn't say that.
well, you did. You said it's very complex and there's different
regimes. Tax rules are very
rules.
complicated.
And
yes,
yet
transfer pricing rules are very
you're
complicated.
asking us to accept that you had a definitive one-off amount agreed, and that there was effectively no discussion and debate over that. That they just came and said it's 130, and you said fine. Are you saying that was what happened?
That's not exactly what I was saying. What I was saying is there's a debate about what are the comparables. There's a debate about tax issues, tax policy, tax analysis. There's not a debate about the number.
No, we're not talking about policy. We're talking about your negotiation on the 130 million. And I think it's a reasonable question Ms. Flynn has asked. Was there a pitch that they made that you brought them down on? It's not ignoble to have done that, because you can go to them and say,
right, I'm not
actually,
saying,
you've not taken into account intellectual property, write-downs in other areas as a result of this. This is what we think. But you're saying that wasn't the case.
Right, I understand the question, and I wanted to provide some background, but I also answered the question, I think, which is no, there was not a number that was thrown out by HMRC, and we negotiated that down. That's not the way the process worked.
Thank you.
I just got one more question. At the end of all this, I mean, you can talk about the different structures until you're blue in the face, but at the end of the day, this is staining your reputation, because you have chosen, in Mr. Murdoch's words, to take very complex routes. Sales revenue goes from here to Ireland, and then, if I believe the Daily Mail this morning, and it's a rule of mine always to believe everything I read in the Daily Mail, it goes from Ireland to the Netherlands, and then from Netherlands to Bermuda, where it has no effect whatsoever on UK corporation taxes, you've kept on saying 6 times. At the end of the day, though, it must have an impact on how your employees feel about working for Google. You can't like the fact that lots of people hate you because of this. They're very angry because of it. Why don't you face up to that?
Well, I think we find ourselves in the spotlight, and we understand why. We've reached the end of a lengthy and intensive independence process. At the end of that process, we're required to pay more tax by the HMRC. The HMRC is not allowed to settle for any less tax than they believe is due. So at the end of a process where they've analysed all the questions you've raised and addressed all the issues that this committee has raised with us, they've told us exactly the amount of tax to pay. So we're paying that amount of tax. We want to pay the right amount of tax. We believe in paying our taxes, and we want to be seen to be paying the right amount of tax. And we've just finished a 6-year intensive review by independent tax experts working on behalf of the government that's told us exactly how much tax to pay. So I want to be in a position where our employees focus on helping the UK make the most of the internet, helping small businesses grow and export and create jobs. And we want to be paying the right amount of tax. We believe we are, because we're paying the bill that the tax authorities told us.
If I could just finish this point. This is what Luke Johnson, who is a journalist and a venture capitalist, and a capitalist's capitalist, wrote in the Sunday Times. Search your soul, Google. You know you ought to pay fair tax. Corporations such as Google debase the reputation of business and undermine civil society by failing to pay their way in an equitable and transparent manner.
Well, we'd love the system to be simpler and more transparent. We're paying the tax bill the taxman has told us to pay in the UK. We can't legally pay more tax in the UK. There's no mechanism.
That's actually not true. You can always no, that's simply not true. You can hand in extra money to the consolidated fund anytime you like. I'm sure the chief executive of HMRC will confirm that.
Mr. David, no,
can we just correct that?
David Malin. David Malin.
Following on from some of that stuff. You've probably paid about the right amount of tax, given how you have chosen to structure yourselves in the UK, in Ireland, in Bermuda and in Holland. You probably have. As you say, you've gone through an exhaustive process. Best and the brightest of HMRC have discussed it with you, and you've gone through all of that, and you come up with a number, and that's probably about right for the law. And then you write an article in the Telegraph and you say, well, actually, it would be a lot better, of course, if they made the law simpler, so we wouldn't have to have all these 6-year processes and all the rest of it, because if they did that, we would do that. But nevertheless, you've chosen to base your structure, your operating structure, on the double Irish, the Dutch sandwich, and to an extent the Bermuda deal, which apparently is pervasive, although that's rather like somebody in the playground telling the teacher that all the other boys are doing it as well. But nevertheless, you've paid, given all of those points, probably the right amount of tax. But to Mr. Bacon's point, though, you know, your employees, and you're growing in the UK, they want to be proud of you. They want to be proud of your contribution. They want to feel as though they work for an entity, which I think one of your boss, does it do no evil, have loftier ideals. That's where Google started from. And it seems a long way from the guy that started the whole thing, coming up with things like do no evil, we're going to be a different sort of company, to you being in front of the Public Accounts Committee explaining why that you've had a double Irish, albeit because of the fantastic language skills that exist in Dublin, that you use Holland as well, and that you use Bermuda like everybody else. doesn't it bother you that some of your employees might bail out over that?
We're set up in order to try to organise the world's information, put the power of the internet in the hands of as many people as possible, and we're proud of what we do in helping people to do that every day and helping businesses grow.
Leave us doubt that you run a good search engine, Mr. Britton. That's not what we're talking about.
That's what we try to do. But I agree, we want to be in a position where we're paying the taxes that are due and that we're seen to be paying the taxes that are due. And I think we've tried to explain, and Tom can give you more clarity on how we do that.
Well, how many employees, you mentioned earlier, I think I didn't write it down, you have in Ireland, how many do you have?
Well over 5,000.
5,000. And the UK?
Just around 4,000 now.
4,000. And Bermuda?
None.
None. Cayman Islands?
So Tom can explain.
No, sorry, to answer my question. Can you answer my question? The Cayman Islands, how many employees do you have in the Cayman Islands?
I don't think we have any Cayman Islands entities.
No, so you have 5,000 in Ireland. They're the guys with the language skills where you book the sales. You have 4,000 in the UK. You have none in Bermuda, and you have in the Cayman Islands?
None.
None.
Okay. None.
So over to you now, Mr. Hutchinson.
In the US, which is an important part of it.
Sorry?
We have a large part of our employees are based in the U.S. That's where most of our IP, our intellectual property development is happening.
We understand and accept that.
And your comment earlier was that you say that we feel good about ourselves, that we've set up this complicated structure, and then maybe we're paying the right tax under that complicated structure. I think it's important to point out that, and I said this a few times, so I know that, yeah, you may want to hear it again, but those complicated structures that keep getting talked about are not affecting the amount of taxes we pay in the UK. So it's not that we set up these complicated structures and now the HMRC has said, well, with that complicated structure, here's the amount of taxes you pay.
So you could have a panel discussion with the UK.
Just on that point.
We would pay the same amount of taxes even if we didn't have that complicated
What
structure.
affects the amount of tax that you pay in the UK is the first part of your complicated structure, which is you book the sales through Ireland. So that affects the tax that you pay in the UK. But if you don't need, if as you say you're paying a fair amount of tax, and I think I've heard you say 19% on global profits, fair enough. Yeah. If that's, which may be fair enough, why go through it all? Why go through the Dutch sandwich? You're paying. Why do the double Irish? Why have the Cayman Islands? Why have Bermuda as part of your setup? If the result of all of that is you end up paying the right amount of tax anyway.
Yes.
Yeah. Exactly. So we end up paying an amount of tax that we think is a reasonable amount, 19%, again, very close to the UK rate.
But my question isn't that. My question is then, fine, the 19% is right. I don't know, maybe it is right. You're the tax guy. If then your objective, laudably, is that you're going to pay the right amount of tax, why do you put yourselves through all this stuff about booking sales in Ireland, about moving profits through the Dutch sandwich? Why do you have the Cayman Islands stuff? Why do you have Bermuda? Because then you have to answer questions to people like us, and it seems a lot to have to put yourselves through if the result of it all is you're paying the right amount of tax.
Let me make an important point. So if we set up differently, and we did have our UK office selling directly to UK customers, that would be a change in our structure, and it's one of the things that's been talked about. That, again, would not change the fact that when the tax rules require you to show profit in the UK attributable to the value of those services.
No, that's a different point. So you're right. That point goes to my other question about whether your UK employees, many of whom will have parents that use care homes and use doctors and and relatives that use teachers and all of that. That point goes to whether or not the way you've chosen to set yourselves up is cognizant of your UK employees being proud of working for a company that may well pay the right global amount of tax, but appears to go to great lengths that it's not in the UK. And that's how I started off, and actually we didn't get anywhere, Mr. Hutchinson. But so, Mr. Britton, just coming back, aren't you worried that you will lose, because young people are ethical these days, more and more so. They want to work for a company that is ethical as well. Aren't you worried about that in terms of your retention and all the rest of it?
Yeah, we want to be in a situation where we're focusing on building products that help everybody and help businesses grow. We want to pay the right amount of tax. We've been through an intensive audit that tells us the right amount of tax to pay here. We've come and answered your questions in detail and will continue to do so because we want to be paying the right amount of tax and be safe to pay the right amount of tax.
I have one more point to make then on that, because you didn't really answer my question about whether the way you're conducting yourselves corporately is conducive, and this is a question for you and your management team, to retention of the best young ethical people that you want to employ to make a difference. You've mentioned small businesses and all the rest of it. I would just say that to the extent that organisations like yours remove and erode the UK tax base away from small businesses. That isn't, there's an attack on the high street from the internet, and one of the things that would be reasonable is if the internet giants, such as yourselves and others, paid the right amount of tax in compensation for that. But I'll leave it at that.
Well, I'd just like to answer your question, if I can. Many of our customers are small businesses. We're helping them to grow, sell more products and export. Deloitte estimated that the value to those businesses of using our services is in excess of £11 billion a year, and we want to be an important part of their future growth as the internet doubles in size. So we're really supportive of those small businesses. We find ourselves in a situation here where we're paying the tax the tax authorities told us to pay, and we want to get on and invest in continuing to grow.
And that's correct, based on the structure that you chose to adopt.
Yeah, and I'd love to invite you to come to Dublin and understand our operations there. Any of the committees welcome to visit us, just as the HMRC did, to understand in detail how we operate. We'd love to welcome you in any of our offices so you can see that yourselves.
Bringing in the Controller and Auditor General, and I've got a couple of points before we wrap up.
In a way, the way you're posturing your explanation is based on saying, as if the UK tax was the right amount of tax worldwide. I mean, it's fair to say that your tax structures aren't just designed to deal with UK tax, they're designed to deal with US tax, which is at a higher corporate rate. I think it's in the 30s, isn't it? So, excuse me, I'm not finished. So, I accept Bermuda is primarily for US tax reasons, not for UK tax. So we can all be happy about the fact that all of these things aren't aimed at the UK tax regime. But isn't it true that you've kind of taken a change in stance to become tax reformers, because now you've worked out that it's better for your brand, and actually you can rely on the incoherence of discussion in the OECD to mean that it'll be a long time before there's any reform. Meanwhile, you still continue to benefit from having a highly professional, congratulations Mr. Hutchinson, a highly professional international tax group in place, still delivering, relative to the US at least, a low tax rate.
I would say, even though that is my expertise, is the tax rules, I would love to have these rules simpler. I would love to have it simple so we could explain it to people who are not tax people.
But it's not going to happen anytime soon, is it?
We wouldn't. Well, I hope it does. I hope that the rules change.
But is it actually likely?
But I think the rates likely? I can't say what's likely, but I think it's important to address your point about what is the right amount of tax. You're saying that we're using these structures to not pay the right amount of tax in the U.S. Again, our overall tax rate is 19%. To me, that seems like a fair amount of tax to pay.
What, against the US rate, you say?
Yeah. I think we're going to bring in actually Richard Bacon on this very point.
Can I just make one more quick point?
Mr. Hutchinson, I'm going to bring in Richard Bacon on this point.
Okay, just really quickly. We go through, just like with the HMRC, we have audits in the US, tax audits. It's a continuous basis because we're a large corporation. That's the way it works. They've looked at our structure. They asked us a lot of questions about it. We've talked to them. We've been very transparent about it. Under the rules in the U.S., this structure makes sense. So I don't think it's. I don't think this is a structure that is aggressive structure. If you understood the U.S. rules, and we've talked at length with the IRS in the U.S. about the structure.
I accept that it's not aggressive, but it is tax efficient, right?
It is tax efficient, of course. Our job is as a tax team is to make sure that if the business wants to do whatever they're doing, we're going to do that in a tax efficient way.
Exactly. Mr. Hutchinson, just to clarify one point before we finish. You've said several times that you pay tax at a rate of 19%. What is the 100 upon which 19% is the amount that you pay?
Sorry, I'm not sure I understood that question.
Well, if you're paying tax at 19%, it must be on something, mustn't it? There must be something which is 100%, of which 19% is the tax that you keep on referring to that you pay.
Yeah, so the number.
What is that 100% number?
Let me explain. So the number the 19% that I'm giving is over the last 5-year period. So it's looking at what is our profit for that 5-year period.
The profits for the last. Sorry, just to be clear, the profits for the last 5 years, the last 5 financial years.
Exactly. You were about to do the math, I think, earlier. So multiply that by 5.
So the profits for the 19% tax rate that you pay is the tax rate that you pay and have paid in sum, in total, on average, if you add them all up and average them, over the last 5 years.
Right.
That's the last 5 tax years. Are you talking about in the UK or globally?
Globally.
Right.
So if you take that amount and multiply that by 5.
Right, okay.
Right.
So what is the amount?
The amount, if you multiply that by 5?
Yes. I mean, you keep on saying you pay tax at 19%. What is the amount of tax?
What's the 100?
What's the total amount?
So let me
what's
tell
the
you the
total
amount
amount of
for 1
money,
year.
which 19% is the amount that you've paid in tax over those, as you say, 5 years?
So it would be 100 billion.
100 billion. 100 billion.
It's 20 billion. It was
so you paid 20 billion in
last
tax.
year. So 20 times 5.
So the most recent pre-tax profit globally, 2015, was 20 billion. That number has been increasing as the company's grown over recent years.
Right. Yeah, I'm not talking about the pre-tax profit in any 1 year, because that's on what you pay tax. But I'm saying, I'm trying to express myself clearly. 19% is the amount of tax that you pay. You paid at a rate of 19%. At a rate of 19%. 19% must be 19% of a number that's 100. Yeah. Are you saying that the 100 billion is the amount which, over 5 years, you paid tax on at 19%, therefore 19 billion of tax? Is that what you're saying?
I was trying to understand your question. What I'm saying is for just the most recent year, for 2015, our overall global profits is 20 billion.
Yeah. Can we stick to the 19%? Okay. This is the number that you've used, not me.
I would have to go back to every year and add up those amounts for every year. I don't have those in front of me. I'm happy to provide
we can provide that.
Yeah. Just a minute, before because this is really important. You've said several times that you pay tax at 19%.
That's right.
Now, that must be on something. There must be a number of which 19% is the amount of tax that you pay.
There is.
You answered that by saying to me that it was actually spread over 5 years.
That's right.
So then I'm looking for 5 years worth of numbers, of which the total number has a number that's 19% of it that you've paid as tax. What I'm looking for, if I were to gross up the 19% number, which is the tax that you've paid, up to 100%, what is the number that I would get to? That's all.
I understood your question.
I can't understand how you wouldn't know that.
With respect, I understand the question. I can provide those numbers afterwards.
What I'm asking is, why don't you know it now?
We have looked at, because I don't have it in front of me. We have looked at those numbers for the last 5 years, and the average is 19%. I'm happy to provide the calculations.
So the 100 billion you mentioned earlier, Mr. Britton, that was the, you reckon the 100 billion was over the 5 years?
No, I just gave you the most recent year's number, that's all. I have in front of me the most recent year's number, and that's 20 billion.
I'm after this 5 year number.
We'll provide that afterwards. We don't have it here.
Mr. Bacon, so we're going to have to get them to write, Mr. Hutchinson to write.
It's a very simple calculation. I'm happy to provide it to you.
If we can provide
that, don't have that.
That would be very helpful.
I'm very surprised you don't know.
I can tell you what it was last year in 2015. It was 20 billion was our taxes.
We just had that from Mr. Britton. I think we're going to have to wait to get that in writing. Sure. Can I conclude by saying, Mr. Britton, you've talked a number of times about this 6-year independent, transparent, was the word you used, process with HMRC. And I say it's not transparent to the taxpayer. And I urge you again to be more forthcoming, so that if you are, as you were in answer to Mr. Mauer, saying you want your staff to be proud, you want to do good in the world, then why can't you tell the ordinary British taxpayer how your tax settlement was reached?
We are, as I said, fully transparent with the government's independent tax authority. In reaching the conclusions they reached about the tax that we should be paying, they looked at a lot of confidential information, and like any taxpayer, we have confidential information we don't want to make public. But we have been, I think, more transparent than any company in trying to explain to you that settlement.
So you're talking about being transparent here in this committee?
Well, I think there's an important approach, which is fully transparent to tax authority. That's how the tax system operates. And
yes, we get that. That's not my point. It's about to the ordinary.
But I think there's a difference between that and being public about all of the details we provided to HMRC in order to reach this conclusion, because those include things like the amount of money individual customers are paying on individual products, which we think is, commercially sensitive.
So is there anything you think you can put out in the public domain that would convince people of what you are convinced of, that you're paying the right amount of tax, to quote you?
I mean, I think by trying to answer your questions and being clear with the HMRC, we hope that the tax system in the UK, that's the way it's designed to work when the HMRC...
Sorry, I'm asking, would you be willing or able to put out any more information into the public domain? We understand that there may be commercial confidentiality applied to part of it, but not all of it. Other companies do more than you do. Will you consider putting more in the public domain?
One of the things that I think we are looking at is trying to understand how we can publish more clearly our contribution in all aspects in the countries in which we operate to help to provide more transparency. I think in line with the OECD process, which we support, and as I said earlier on, we would love the tax system to be simpler and clearer because it would address
Mr.
the
Britton, I am
questions you're
puzzled,
raising.
and you know, I mean, we've heard already when you came to us in front of us in 2012. I remember vividly you were sitting, I think, in this very room on the end there, and you were the last we came to, and you were very candid about the arrangements of Google Inc., the company, and the tax measures, the tax avoidance measures you use to make sure that you're as tax efficient as possible as a company, and you were unapologetic about that. Today you come and say you're absolutely delighted about the idea of greater simplification, the OECD processes, things that are into the future. If you're so keen on this tax reform, why don't you lead by example and provide more information to the general public, both, I'm sure, other countries as well, but in the UK, which is what we're concerned about?
I would say that the amount of information we've provided on this tax settlement is more than I've ever seen a company provide. We're talking about a lot of the details of the settlement. We can't go into information that's commercially sensitive, but we've been talking about a lot of the details in this committee, and I've never seen a taxpayer share so much information about a tax and audit settlement,
Okay.
which
Well,
is a confidential matter.
I still think that the real issue here is that the British taxpayer finds this bewildering because they are paying their tax. Small companies that you say you support have no ability to work around the rules as you do.
Any company that's international has to apply the rules just as we do.
You've chosen to set up structures, Mr. Mowat. So I think we won't go back into this, Mr. Mowat, but I think Mr. Mowat made the points very clearly. But I think we've come to the end of where we're going to be able to get with you. We're now, I want to thank you for coming. Our transcript will be up uncorrected on the website in the next couple of days. So please let us have any comments if you wish to. We'll be putting out a report in the next couple of weeks. And I thank you indeed, very much indeed, for coming along. And we're going to now ask if you're very welcome to stay for the next session. And if we could call our HMRC witnesses up, please. Thank you.
Thank you, Chair.
Thank you.